more on the FMCG space. Now, Abneesh Roy, the Executive Director at Nuvama Institutional Equities, is joining in to talk about that. Abneesh, hi, good morning, and thanks a lot for being with us. First, of course, the here and the now, right? You have many companies that came out with numbers. What stood out is Marico. It was a strong outlook from the management. They said domestic volumes will trend upwards Q1 onwards. How are you positioned on the stock?
Yeah, definitely. Thanks for having me. What we are seeing, Sonia, is across the board, FMCG companies' commentary is changing for the good. We had highlighted earlier that in FY25, 3-4 things will change for the sector. One is volume growth, especially in rural, will come back. If you see, monsoons will be good, but already in Q4, when there is no monsoon, almost every company is saying that already some improvement is there, or they expect that rural will now start growing faster and maybe even faster than urban for some companies. Second point is pricing growth has been negative for the sector in FY24. I think FY25 for every company it will be positive, and that will also help in operating leverage because there is some bit of inflation plus long-term average. If you see, FMCG companies have taken a 3% CAGR in pricing, while last 1 year it has been negative. So there is a high pricing power and high comfort also to pass it on to customers. Third, of course, is local players had become an issue in the last 1 year. It's always a cyclical thing. Whenever there is a sharp inflation followed by sharp deflation, the local players come back because suddenly they also have higher gross margins and they start advertising. That will end in Q1. So after Q1, you will see that Britannia, HUL, Marico, and almost every other company will see an acceleration in volume growth due to this fact also. Last point will be the sector is under-owned. It has been out of flavor. Some stocks have done well, but most stocks have been out of flavor. So there will be...
Okay, I think, Abneesh, can you hear us? We lost you there. Okay, I think we lost the line with Abneesh. But Abneesh was just running us through. We'll just have him back on in 30 seconds. The pre-open is kicked off, so maybe just take a quick look at where the rates are coming through. The Nifty is up about, what, 50, 60 odd points. And I think we've got the, the Sensex, which will come up on your screen as well with a quick check on things there as well. Maybe stocks, right? Hindalco will come up on your screen and reacting to the Novelis earnings. Lupin, we should do a quick check-in. Hindalco is starting about 1.5 higher. Lupin is the other one. Godrej Consumer, which we were talking about earlier. Marico, of course, as Abneesh was pointing out, and so on and so forth. I think we have Abneesh back. Abneesh, we lost you there. Please continue.
Sorry, there was some drop. Yeah, Marico, we are positive, Prashant, so definitely we upgraded also. So we see all those things which I described for the sector. For Marico also, it will pan out. Already in Parachute, if you see, they have started taking price hike. They have taken 6% price hike in some of the SKUs. And we expect that in Saffola also. In second half, there will be a price growth coming back. One more thing is whenever there is inflation in copra, Marico gains market share because, again, local players are not able to really manage the volatility. Plus, company has given very aggressive guidance for FY27 in two of their growth portfolio, essentially in the foods and in their personal care. I would say that those are aggressive numbers, but in the past, Marico generally does manage to achieve quite close to their vision. So I think doubling of their business in food and in their personal care, I think that's a very good development. Already it is 20% of their business in FY24 versus 15% in FY23. So overall, we are positive. We are upgraded to a buy, and we do see that the stock should do well with a price target of 640.
Abneesh, when you talk to fund managers, do you also get a sense that all of this, what you highlighted, of course, it's happening and that's changing at the margin. But, Dabur, Marico, HUL, all these stocks, they've not done anything for 3-4 years now. So there is that element as well. And people are hungry for ideas, right? So is that a big factor into the mix right now as well? Why people are kind of sort of starting to view this a bit more positively, the space?
Absolutely, Prashant, bang on. So clearly, people want to see where there's valuation comfort. Also, election results will be known in the next 1 month. I don't see there's a big surprise there, but always there is some level of skepticism here and there. So again, from a government and policy and that kind of a perspective, FMCG is a safe space. So yes, we are seeing sector rotation happening. If you see IT index, there is a fair bit of correction also. So yes, fund managers are now much more amenable to hearing these ideas. These are a bit out of flavor. But because of monsoon, because of pricing coming back, generally commentary also improving, plus local player issue is also now behind in Q1. I would say yes, definitely sector allocation will increase for FMCG.
All right, final question, Abneesh. I'm also looking at Emami. You know, that stock in the last 1 month is up close to 10%. Going by all that you're saying, rural India is seeing some bit of recovery. The monsoons are expected to be more or less stable. And I think valuations as well are pretty much okay. Any view on this one, Emami?
Yes, in fact, this is also one more stock where, in fact, the valuation comfort is even higher. And one more point you missed will be in summer. Their talcum powder business should do extremely well. We are picking up strong double-digit growth in that part of business. But in the cooling hair oil, unfortunately, we are not getting the same. But yes, I would say that yes, even for Emami in Q4, we do expect 7 to 8% kind of sales growth. Our preview is 6%, but we do expect a beat post the numbers by, say, Marico, Dabur, etc. So yes, Emami valuation comfort is high. The pledging is also now just 12%, and company is becoming more aggressive in terms of advertising spend. So yes, Emami, cheap stock, good rural play, but it will be a mid-level growth. It will not be a very high growth, unlike some of the other names which we mentioned. It's a mid-moderate kind of a growth.
Okay, always nice speaking to you and understanding about the, the market and the specific sector. Abneesh, thanks a lot for joining in. Well, just the latest on what's happening with, the trading hours and the